The fundamentals of the Manhattan residential real estate market remained solid for the third quarter of 2025, proving once again the undeniable allure and endurance of New York City residential real estate. And I'm sorry, I am just a shameless cheerleader for this city. Stay with me because in this video, I'm going to break down what happened in the third quarter. I'll be highlighting some surprising emerging trends, and we'll be talking about what this means for buyers and sellers as we head into the final quarter of the year. We'll cover sales volume, pricing, inventory levels, and neighborhood level insights. Spoiler alert, the Upper East Side is the new hot neighborhood. This was the strongest third quarter in Manhattan for closings in 3 years. That's right, closings rose 5% year over year to hit a 3-year high. While signed contracts, an indicator of future closings, rose for the 6th consecutive quarter, they're up 1%. Sales under $3 million rose 2%, while sales over $3 million, those jumped 20%. So why does that matter? Why am I highlighting it? It's because a buyer under $3 million typically relies on a mortgage, whereas the buyers who are over $3 million, they typically have other financing options available to them, or they're cash buyers, or the increase in the mortgage rate simply doesn't impact them economically the same way it does a lower price buyer. There's some interesting things in the data. Now, although the signed contracts increased 1% annually, they actually fell 22% when you compare them to last quarter. And there are some reasons, in my opinion, why that happened. The first is there are a number of buyers out there who can't find what they're looking for. And we're going to talk about that later in the inventory. And the second is I do think we have some potential buyers on the sideline. Who would be on the sideline this time of year? Typically that's a first-time buyer or a buyer who is locked into a rental. Most landlords don't want their leases expiring in the winter months, so many of them expire in the spring. I expect those buyers to be out in the first quarter of 2020. That buyer frustration I was just talking about, it does show up in the data. Even though inventory is up 1%, we are noticing that a larger apartment, say 3 bedrooms or more, that inventory is down by 8%. Meanwhile, new development launches, those are down 35%, and that's a significant portion of the luxury buyers' choices. The drop in new development inventory will cause upward pressure on condominiums in the coming quarters. Of course, the next question is, how much can I sell that apartment for, Julia? So let's talk about pricing. Market-wide, prices did increase, and that was because the condo market and the new development was very active last quarter. The median price hit $1,225,000, which is up 7% annually, while the price per square foot, well, that median price is $1,792. That price per square foot represents a post-pandemic high. Co-ops continue to offer strong value compared to condos and new development, which trades at a much higher price per square foot. Now, if you want some insight into why new development prices are so much higher than a resale condominium or a co-op, I do have some insights into one of my recent blog pieces entitled Real Estate's Wake-Up Call. And the answer to the question might surprise you. So go ahead and take a look at that. I'm going to put that link to the article in the show notes. If you would like a deeper understanding of the value of the property you own, I'm always more than happy to have a conversation with you, but you're also welcome to go to my website. I have a free home evaluation tool. Just go to thebolandteamnyc.com. You don't even need to contact me, just go ahead on and you'll be able to get a range of what your property is currently worth today. As we head into the final quarter of 2025, I'm expecting to see the same cadence with the usual holiday slowdown that you can count on starting the week before Thanksgiving. Now, a number of people are tempted to take their property off the market at this time, and that might be the right personal decision for you if you have lots of visitors or you're entertaining. But if you're not, I always encourage my clients to keep their properties on the market, and here's why. At this time of year, the buyers who are still in the market, they're very serious. This year, of course, we will be electing a new mayor on November 4th, and that could give some people reason to pause. And then we have the global uncertainty of our times. Honestly, I'm not expecting either event to have a large impact on the New York City residential real estate market because, as I said at the beginning of this video, the market and the fundamentals remain strong. Okay, let's dive into the neighborhood insights. Is the Upper East Side the new West Village? Well, if you're following along on Instagram, you might think it is. And what about all those fashion bloggers and art people who have moved uptown to get away from the crowds? If you don't believe me, try getting a reservation at Chez Fifi. Prices on the Upper East Side increased by 3%, driven by luxury demand. Meanwhile, active listings are up by 3%, which is the lowest they've been in a third quarter since 2016. Now, I follow the luxury market on a weekly basis, and I've noticed that the past 2 weeks, the number of luxury contracts signed on the Upper East Side has outpaced downtown. On the Upper West Side, sales rose by 4%, driven largely by sales and new development, which were up 41% compared to last quarter. This pushed both the median price and the price per square foot up significantly in this neighborhood, but don't jump to conclusions and think your resale has suddenly increased significantly. It was just a metrics aberration for the quarter. However, if you are purchasing on Billionaires Row, that's a different conversation. New development sales in Midtown jumped 80%. That's incredible. But what was really interesting is the categories in new development which drove those sales, and that was studios and 3 bedrooms. Downtown was the only submarket where the median price declined, and that was due to a decline in the amount of new development sales last quarter. But there's still plenty of buzz downtown around new development, especially around the new Flatiron building conversion. This triangular shaped building has been an office building since 1902, and for the first time it's being turned into residences, and it's represented by Corcoran Sunshine. And the team at Corcoran Sunshine, along with the developers and architects, worked together to solve an incredibly difficult problem in order to make the building inhabitable with really great luxury layouts. And it took them a long time and a lot of talent to do it, proving once again why Corcoran Sunshine is the #1 leader in new development sales and marketing. The Financial District and Battery Park City, those stats came roaring back again, and that was largely due to new development. Mostly they were sales at 125 Greenwich, and those contracts were signed prior to the third quarter. Now let's talk about my home turf, Upper Manhattan. I am recognized as an Upper Manhattan expert, and that neighborhood is offering astounding value right now. Closings were down in Upper Manhattan by 16% annually. That marks the slowest third quarter since 2009. And I can tell you based on my own experience, and this is only for resale, not Claremont Hall, but in the resale market, it's been very slow. And here's why, and I've talked about this in past videos. There is a lock-in effect in Upper Manhattan where many of the owners have bought not that long ago, maybe less than 10 years ago, and they have a 2.5 or 3% mortgage rate. So they're not incentivized to sell just yet. Now, if you are smart enough to be looking in that neighborhood, well, you're getting a huge discount. The average price per square foot in Upper Manhattan is $955 a square foot. That's an 88% reduction compared to larger Manhattan. And that last quarter, that price per square foot, that was $1,792. And if you are looking in Upper Manhattan, many of the resale condominiums that you're going to be taking a look at, they are new developments that were built in the past 10 years with a full service building and plenty of amenities, parking, outdoor space, gyms. It's a great way to live. Now, I've been having this conversation quite frequently with people who assume that the reason that Upper Manhattan, and in particular, Central Harlem is no longer desirable is because there's something wrong with the neighborhood. And there is, but it began in Albany when they took away the 421A tax abatement. At least that's my opinion. I was selling in 2010, 11, 12, 13, 14, new developments, and there was all these people coming to the neighborhood. They were so excited. And as a result, with all the new residents, we had new businesses and restaurants were expanding. Now, 2017, that tax abatement was taken away and not renewed. 2 years ago, they came back with a different tax abatement, and that really covers rental buildings, not condominiums. As a result, we have some beautiful new rental buildings, but they're all along the 125th Street corridor, sort of like Fifth Avenue, Lenox area, further east. That's a very different neighborhood. That's East Harlem. It's not Central Harlem. And I would argue that we need that tax abatement back for more condominiums because there's plenty of space to build. Okay, I'm going to get off my Upper Manhattan soapbox now and just say that despite the headlines, the upcoming mayoral race, no matter who wins, what's going on in global politics, New York City remains stable. It's a great place to invest. It's a great place to buy, especially if you're staying here for the long term and you can buy a co-op, which offers tremendous value. And if you're that luxury buyer looking for something really great, well, there's some new developments that are beginning to open on the Upper West Side, one that I'm particularly excited about. I'm keeping my eye on, so ask me about it. Thank you so much for watching my video. I always appreciate it. And if you would like to have a conversation about your options for buying and selling on the island of Manhattan, I would be more than happy to have that conversation. You can reach out to me through my website and we'll set up a time to talk. I'll see you next quarter, first week of January. Until then, happy holidays, be well. Today's video was shot in a model apartment at Claremont Hall. I am in 19D, and if you'd like to learn more about this one bedroom, reach out to me today.